around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
At this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Morning, everybody. It's Thursday, February 12th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at March corn up a penny and a half at 4.29. March soybeans were up 11 at 11.35, and March Chicago wheat was up 2.5 at 5.39 3/4. We had a export sales announcement here this morning. 108,000 metric tons of soybeans sold to Egypt, and that was for 25. We are also through 8 of 19 settlements for our spring crop insurance discovery period. Corn is currently averaging 4.58. That's unchanged from the previous settlement. And soybeans are currently averaging 10.93. That was up another 2 cents from the previous day's settlement there. So we continue to inch higher on the bean side. Weekly export sales, real solid week for corn. Old crop corn, 2,069,600. Upper end of the range was looking for a number closer to 1.5. And we sold a little bit of new crop, 60,000 for next year. Soybeans, 281,800. That's well below the low end of the range. So that was pretty disappointing there on the bean side. 1,300 sold for new crop. Wheat, pretty solid, upper end of the range, 488,000. 500 was the top end of the range for the estimates there. And then we saw a little bit of new crop, 13,900. Meal sales were solid, 357,000. And we sold a little bit of oil, 2,100. Good morning, fellas. I guess what we know here is we start the morning, a solid open higher there in beans last night on news that there's potential for that April meeting between Trump and Xi to possibly extend the one-year trade truce that was set to expire or is set to expire November 10th. So I think market took that as a positive signal. We opened higher. I know, Ben, you got a few thoughts on that market. So why don't we kick it off right there? Share what you saw, Ben. You know, we came out of the gates, kind of set back a little bit here this morning, but what are your thoughts?
Yeah. Gap higher. We made a new high for the move by just a few cents, and we're back into a mid-range trade. You're just always kind of cautious for a setup where you settle at the low end of the range and maybe we gap lower. There's certainly the perception out there is that there's a lot of people that really hate this rally, which, you know, to me may mean it has a little more juice in it, but I don't necessarily love. I want to see how we close today. There are 5,700 1140 calls open in March. There's 8,000 1150 calls opened in March. You know, one of the things that we've been focused on the 8 million tons that Trump discussed that got us going here, but it's the rainy season is stuck around in South America as well, delaying some soybean harvest, maybe causing some quality issues. And if you go back to 16, we had a year where that happened, and it got really got beans squirrely. And it was really kind of a similar setup, you know, just bearishness all around that there was going to be a good crop, and it started raining. But I think the implications there also is that every day it keeps raining and you can't harvest soybeans. You keep pushing the safrinha crop back into what should be their dry season. So, you know, I'm going to have a really open mind to what soybeans can do. And because of the fact that we planted so few of them and we're crushing like crazy. So, it's a day-to-day thing in the soybeans, and I think today you watch where you close after making a new high overnight.
Yeah, very good. Dustin, corn open interest up yesterday, 23,996, and it's pretty interesting that with what we know about the position of the cash markets right now that, you know, corn is still at right around 430. You know, I mean, it's going to be an interesting kind of 2 weeks here as we inch our way into first notice day again.
Yeah, I know we keep, you know, kind of beating on this drum about first notice day, but I think the market cues are telling us that the setup could still be there for it. Number one, you know, let's just go back to beans for a second. I want to pull up a chart of the ratio. So this is nearby March beans divided by corn. And so just think about it as the number of bushels of corn it takes to buy 1 bushel of soybeans. So we've bursted through the previous high in the last couple of days. And this little, purple box I've highlighted is the Trump announcement, right? So this is a non-free market announcement. Right? Trump wants China to buy U.S. beans. So the market's obliging, saying, wow, that's going to put us pretty tight. It's not like we're erasing world bean supply by doing it. We're just erasing the U.S. carryout. So we're seeing inversions happen, old crop to new crop, because of this non-free market push. And I think we just have to remind ourselves what happened during that phase 1 trade deal when China, bought a bunch of beans and corn from the U.S. at higher rates than they otherwise would have if they were on a free market between them and South America. So a lot of people I can just see frustrated online that are trying to be short beans. Like, why would they pay for more expensive U.S. beans? Like, this is a non-free market thing, and anything goes if that's the case, right? We could run out of steam because China's not showing signs that they're following suit. But like, we have to be humble to know that we can get some very weird outcomes in non-free market agreements. I'm going to also bring up another file, which is the march-dec corn spread, because I think this is very related. So first notice day, okay, we have all the pressure of an extra billion 2 bushels than last year. Everyone has been so amped up about this corn demand, yet like we get these huge sales and nothing really is moving. Why? Because we've delivered so many contracts on basis and on DP, and there's still bushels that need to come out of the bin. We know this from poor basis levels in the West. We have the USDA stocks count that the market's trading. We'll figure that out, whether or not that's like as big as they say over the next couple of stocks counts, and seeing how basis and spreads do through the summer. But this is leading into today. So yesterday we had this huge sell-off. You can see a new low being made on this chart yesterday. And it is very related to the bean-corn relationship, in my opinion. As beans go up, both the front and the back end, these 26 corn says, hey, maybe I need to compete to keep acres because we already have a natural rotation out of corn into next year. Corn prices may be more stable than they otherwise would have been because of this bean rally. They're very related, right? High correlation, even though this is a bean deal, not a corn deal. They didn't say anything about China buying U.S. corn. And so we get to the end of the line here for these contracts, and corn's holding value, and the back end needs to compete. The front end still has all these bushels being pushed on the market. So we're at new contract lows for the spread, but we're not at new contract lows for flat price. We're still, 8 cents, pretty far away from contract lows, really, for the front end. And I think that there's a chance that what we're seeing right now continues to play out because of all the people that are kind of forced into this decision. It's not that farmers want to sell a roll. They're going to run out of time on basis only contracts. So that's the narrative I think could happen. I'm not saying that that's a foregone conclusion, but we're getting cues that that's the signs that are coming.
Yeah, that's good stuff. Jace, what's on your mind? As you look at these markets, and we're almost halfway set for crop insurance, which is hard to believe. We're going to get about 4 weeks. We're going to know what that first line of defense looks like.
Yeah, no, I think Dustin put it perfectly. I couldn't agree more with kind of the setup. Interesting. November bean seems to be fighting for acres. So that's good to see. So you start to think about what's the acre mix up. And I think like Dustin's point, natural rotation back to beans. Trying to think of what could be a friendly story for corn. I think most of this is noise if South America continues to have good weather. I mean, I think Ben made a good point. Maybe some harvest delays. We start this Safrinha crop a little later. I mean, you could write up a really bullish corn story if we have a big switch and we have a problem with the Safrinha crop. And we built this huge demand base in corn. New crop corn, maybe we have some weather issues. The next few months could be really interesting for corn. It's not now, I'm not saying that now, but I'm trying to, a couple of these things go right or wrong. You could get a really good corn story. So, I don't see, new crop corn prices, have a lot of risk of going lower until some of these things are figured out. I mean, we're not going to know safrinha crop for some time. We're not going to know acres till the March intentions, and that's kind of a joke because who knows, when we'll really know corn acres. But so there's a lot of things that got to go, right or wrong for corn. So I'm going to be, kind of focused on that. Like I said, this is all noise now because there isn't a problem yet that I see in South America. And if their weather continues to be good, like I said, I think there's this uneconomical premium put on beans right now. It's ultimately not going to matter in the big picture if there's plenty of supplies around in the world. So,
are you guys, as you're having conversations, I mean, you getting a feel? Is it sort of status quo today for planning intentions for folks? Like, do you see a mentality or a thought coming?
Well, I would say definitely switching a little bit, questioning it on if they should be planting more beans, with the recent rally for sure. I think some people are probably gonna, if especially prices staying here for a while, especially new crop prices. I mean, we're gonna set a higher than expected, crop insurance price. So right there, that helps, and I think if we can keep the steady premium, and some optimism from the farmer in it. And if guys are looking at these, input cost, fertilizer cost bills, that kind of, influences farmers too. So I think it is, shaking up the rotation a little bit.
Well, that's exciting. We need something to battle a little bit, because I think the overall writing take is, I mean, you can't plant that many corn acres, right? We've taught ourselves that, like, that can't happen again. Maybe it does, but we're our own worst enemy if that goes down, right?
Yeah. Well, if it's to perceive that we're not going to plant corn acres, then the guys out there be like, well, then I should plant them, right? Because no one else is going to plant them.
Yeah.
We've seen that before too. So
yeah, they'll never see me. Yeah. What a business. This is good stuff.
Well, I think I would say there's definitely an excitement for the 45Z, right? That may get corn acres in those areas that for those ethanol plants that kind of have the potential that you can see a much stronger basis this year. That might sway some. I think the last couple years, if it didn't work out on price, we have had large government stimulus, right, directly to farmers, and that number's been uniform. So Central Illinois ground is getting the same as far western North Dakota ground per acre for corn acres, and then we have higher subsidies, right? If weather is a concern, the county is going to be negatively impacted in those dry acre counties. They're paying 80% of the bill for crop insurance. Those are huge confidence boosters to build corn. So I would not necessarily rule out a surprise corn acreage build from all of those things. They're just invisible hands that I think may explain why we had 98 million corn acres last year when I think it didn't seem likely that would be the case.
Devil's advocate, Dustin, just a question. I mean, you talked to some guys though out west that had record corn crops this year, right? The best corn they've ever grown, and planted the most acres that some of them had ever planted to corn, right?
Yep.
And still lost money, bad basis, storage problems. Weren't set up to handle what came down the line for that crop. You think that they go and repeat that though? I mean, in all honesty, how many times are you going to plant a record crop and lose money?
Well, I agree, but I don't know that the losses are that extensive. And like if South Dakota grower gets a 205 bushel yield, right? That's a lot of extra yield for their cost structure. So like they can handle, a little bit less basis because they're normally dealing with 160 bushel yields. It's just so much more revenue from that type of yield. And I think that's a confidence booster there. Yes, the logistical problems certainly are a concern, but I think the strong yields almost reinforce that they'll give it another shot because they're growing better crop. They did grow better crop. Yeah, it's hard to say. I think we've moved away from a lot of wheat acres. We're moving away from cotton acres. I think we should, like, going back like 5 years ago, prior to all this, like the way we do business now, relying on government payments is so much different than like just a straight up 85% insurance policy Central Illinois grower 5 years ago. And I would expect 5 years ago we would see this massive rotation out of corn acres back to bean acres. And now I really don't want to have too strong of an opinion about anything. Like I'm trying to focus on like, what does your rotation look like for you with all the tools that you have available to you and your APHs and your cost structures? And then like, let's try to have a humble imagination of what's possible this year, bullish or bearish. Just like, how do you insulate yourself? How do you focus on your own operation and get through the year without major losses with the potential to get good gains? I know we have a lot of opinions on this program, but like it really boils down to like, you got to be kind of humble going into a year, not knowing where you're going to be.
Oh, no doubt. Yeah, the game is ratcheting up, and if you got questions, I mean, there's some big decisions coming in the next 4 weeks, as we've talked about numerous times. Give us a call. We'd love to go through it with you. Ryland, we got just came into the open here, but let's talk real quick on livestock. The cattle market's just relentless, man. Right back to the highs yesterday. Right. And our hogs are now $6 off the high, so kind of concerning there with this latest little push to push lower. So what are your thoughts as we start the day?
Yeah, we had this nice little pop here out of nowhere. It looks like market got pretty excited that there was some early trade in Kansas, about 243. So, just based off the last week's average, still up about $2, but still haven't seen the high side yet that we saw last week. So overall, I think you just got a lot of confidence that packers were still going to kind of keep the market supported here, even with all that's been kind of going on, as we kind of stated yesterday. Like the market had just been performing a lot better than one would expect, given all the kind of weaker tone in beef prices and, a lot of the seasonal expectations, the headlines about the Argentinian beef quotas. So with all that, market's holding up really well. So overall, just kind of makes me feel like we're going to kind of see that cash trade start to stay pretty firm here. Obviously, there's a big seasonal precedence for the market stay up over the next several weeks, but then you kind of run into a little bit of demand pressure overall. So we'll see if that comes to fruition. And yeah, on the hog side, yeah, we're $6 off the highs. I mean, it just looked like we kind of ran into a wall here. Just couldn't get April quite over a buck here. And the carcass has just been kind of languishing. It feels like open interest was down 2,200 contracts. So it seems like we're still seeing a liquidation on the managed money side. I think we had really good premiums in the back end of the market, but now, just waiting for the reality to kind of set in a little bit, that maybe we just got a little bit ahead of ourselves. So I think you just got a little bit of technical weakness here. It's going to be looking to test that 40-day moving average, and overall just cash prices are still pretty firm at 88.17, up 43. So you got the February board kind of creeping up, or at least hanging out around those levels, so likely to kind of sustain after the liquidation kind of stops here. So that's what we'd be looking for today, just kind of testing those near-term support levels.
Very good. Appreciate the update there. We just came into the opening. We got March corn up $1 3/4 right now. 429.5 is the last. March soybeans are up 13. 1137.25 is the last in that market. And March Chicago wheat is up $0.01 1/4 at 538.5. Tomorrow is Friday. We will have Fun Fact Friday, so be sure to tune in. Everybody's favorite segment of the week, and it's a good segue into the weekend. So be sure to tune in. Also, in the comments section, you notice the link for the War Room Report. Be sure to check it out. We've got premium content, updates on crop insurance, reactions to all the USDA reports, in addition to a daily letter that we put out talks about deeper dive into the markets, a lot of the things we talk about on War Room. So be sure to check that out if you're looking for a little more guidance through these markets there. Also, 10% of those subscriptions goes to support the AgYield Next Gen Foundation, supporting the next generation of ag leaders through our national scholarship competition. So be sure to check that out as well. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content, all for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield Next Gen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at AgYield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.